This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Hedge funds focused on commodities have generated strong returns in 2021, and investors long wary of such funds are now putting money into them, betting the recovery from the pandemic will charge demand for oil, gas and raw materials from metals to grains to sugar and coffee. While money has flooded into other commodity investments, hedge funds are a more surprising choice after years of outflows and closures of several high-profile firms. Among the funds notching big gains this year are those run by famed oil investor Pierre Ondorand. His commodities fund made 27% in the year to the end of May, while his discretionary enhanced fund made 33%, a person familiar with the matter told Reuters on Wednesday.
Global oil trading companies are ramping up jet fuel exports from Asia to Europe and the United States, as widespread anti-coronavirus vaccinations and relatively lower infection rates allow commercial travel to resume faster in Western countries. The strong demand from the West has fully drawn down surplus jet fuel stored on ships around Singapore, while refiners' margins for the aviation fuel, a big drag on overall profits during the COVID-19 pandemic, have nearly trebled since end March. Asia exported about 417,000 barrels per day, BPD, of jet fuel to Europe and North America combined in April to May, nearly 32% higher than 316,000 barrels of oil per day for February to March period, according to Reuters calculations based on data from oil analytics firm Vortexa.
Moving on to the top news in the energy sector.
Asian spot prices for liquefied natural gas, LNG, rose for a second consecutive week and touched their highest since January, buoyed by higher oil prices and firm demand from China and Europe, industry sources said. The average LNG price for July delivery into Northeast Asia LNG was estimated at about $10.95 per million British thermal units, up 65 cents from the previous week, they said. LNG prices are expected to recover over the course of 2021 as vaccination rates improve and strict restrictions are gradually repealed, Fitch Solutions Country Risk and Industry Research, a unit of Fitch Group, said in a note on Friday.
Oil extended gains on Friday, with Brent topping $72 a barrel for the first time since 2019, as OPEC plus supply discipline and recovering demand countered concerns about a patchy COVID-19 vaccination rollout around the globe. The Organization of the Petroleum Exporting Countries and Allies on Tuesday said they would stick to agreed supply restraints. A weekly supply report on Thursday showed U.S. crude inventories dropped more than expected last week. Oil extended gains after U.S. figures showed non-farm payrolls increased by 559,000 jobs last month. The U.S. dollar weakened after the report, making oil cheaper for holders of other currencies and lending support to oil prices. Next, we have the top news in metal markets. Global copper smelting extended its rebound in May, touching fresh highs for the year as operations continue to take advantage of strong prices, data from satellite surveillance of copper plants showed. Activity in China was strong at first, but weakened through the month as smelters undertook seasonal maintenance, satellite service Savon and broker Morex said in a joint statement on Friday. We are now entering a fascinating period, where seasonal declines in smelter activity in China and the rest of Asia are to be expected, and other regions are showing no signs of slowdown, said Guy Wolf, global head of analytics at Morex, which helped to develop Savon.
Proposed restrictions on imports of scrap metal into Malaysia would see the Southeast Asian country lose out to its neighbors on much-needed investment in recycling, industry association officials said on Friday. Malaysia has in recent years emerged as a scrap metal hub, importing waste copper and aluminium from places such as the United States and Europe for processing into a form that will still be accepted by top metals consumer China, which is within easy reach by sea. After a years-long crackdown on solid waste imports for environmental reasons, China now only allows very high-grade scrap to enter. Malaysia, wary of becoming the waste dumping yard of Asia, is heading down the same path, this year proposing stricter guidelines on imports.
We will now look at the top news in the agricultural sector.
Chicago corn, soybean and wheat futures gained on Friday as hot, dry conditions in parts of the U.S. Midwest threatened yield potential at a time of tight global supply. The most active corn contract on the Chicago Board of Trade, CBOT, ended 20-3/4 cents higher at $6.82 - per bushel, gaining 4% for the week. New crop December corn added 25 cents to end at $5.91 -1/2. CBOT soybeans gained 34-1/2 cents to $15.83 -3/4 per bushel, increasing 3.48% for the week. New crop November soybeans added 32 cents to $14.35 -1/2. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.